Thank you very much. Thank you, all of you. I'm trying to be rational here, as I think if only Mrs. Thomas had a harder name, she'd be fine. That just can't be our answer here. So I was thinking about your numbers, Mr. Pratt, where you said, oh, it's okay because only 2% of them are problems and only 5% are dissatisfied. Is that right?
Yeah, I didn't say anything was okay.
No, I
just want to be clear on
about that, but just
you're right,
showing
big picture,
these good numbers.
Absolutely,
and I'm
big picture.
Trying to compare that to the FTC reports, because FTC looked at 3,000 credit reports. Right. They found that 21% had a confirmed material error. They found that 5% of the 3,000 had errors significant enough to change their credit risk profiles.
There you go, and that's the real key.
Okay, well then let's get into that number. So
right.
200 million Americans use credit reports, is that right?
There's more than 200 million consumers with a credit report.
So that means 40 million of them have errors that could significantly affect their reports if you take the FTC 3,000 credit reports and extrapolate it out.
Well, you're right, although it's about 98% of credit reports that don't contain those errors. But here's the key, and this is why we put a new group together to look at data quality, Senator, and that is when you look at the data quality, the disputes that went through the system, it's boring. It may not be exciting, but this is what you have to do to get a data system to work better. And I'm telling you right now, for example, about 24% of consumers disputed a balance. Balances oftentimes are a result of consumers.
I want to get those numbers on the thing, though. But if we just extrapolate them out, if it's like, just say instead of 21, it's 20%, had some confirmed error. So that's where I got to the 40 million.
Right.
But if you go to the 5%, then you're still at 10 million people. 10 million people is a lot of people. And the reason, I figure we're like the canaries in the coal mine up here. So when we start having people come into our offices all over the country, you have a real problem. If it's just one person I see in a parade, fine. But when we start having dozens and hundreds of people contacting our office, then there's a problem. And so this number that you're throwing around on the 98% and the 95% bothers me, because we're still dealing. If banks said, oh, guess what? 2% of our customers have less money than they thought they had. That would be a big scandal if their accounts were reduced by, even $500 and it was suddenly missing. That would
Senator,
be a scandal.
if I've said it wrong, if that's the feeling you have about our industry, that's the thought, the response you have. The reason that we have new groups brought together, the best data quality experts in our industry, the best consumer relations service folks in our industry, is to look at these percentages. So it's not a victory when we say, even if we've got 95% of it right, we want to look at the 5%. That's attitudinally where we are, and I just want you to know that. That's important.
Okay, great. Just to use one example here. So this is a different example than the jewelry owner. This guy pays his mortgage every time on time. He saves his canceled checks. I don't think many people do that anymore, but this guy did. Nevertheless, the mortgage company counted him late by mistake. This is the mortgage company. Then he made them recognize the error, and he even went so far to notify all the credit bureaus of this error. Okay? However, they still showed up as late. So then he writes a letter of explanation to the credit bureau, encloses copies of his check. Most people wouldn't have this. He encloses copies of his canceled check, other supporting documentation. The credit bureau refuses to acknowledge his case. His name's Mr. Bell. Now he cannot refinance his house at current rates. So my point is, this is just one example of one guy in Minnesota whose name was probably Nelson, but that's what we're dealing with right now. And so I guess I'd like to just hear from you, Mr. Reingold, of what you think would be the best way to go here. If we need legislation, if Mr. Pratt's right and it's these other third parties that are coming in that are trying to fix it, and then they're not really fixing it, but they're probably a market there because there's so many problems.
I think there's a lot of answers. I think the Fair Credit Reporting Act, if enforced properly, if the CRAs were kept to the standards of actually maximum possible accuracy and there was enforcement there, I think in many ways the FCRA works. There are a couple of fixes that could be done. Like a consumer like Ms. Thomas would have the right, if the law was changed, so they can seek conjunctive relief. So the court can order them to fix it. That would be a really good remedy for people. One of the, I'll leave it there, but I wanted to answer one of your other questions, which I think is really essential here. And I think what we see here, and I thought the 60 Minutes report did a really good job of it in terms of how the dispute process works. They went down to Chile and met these folks who worked in the dispute process. They had to do, 90 a day. The dispute process is that person, Mr. Bell, who provided all of that information. I think it's a pretty safe bet that all of that information went to the credit reporting agency, went to the dispute handler, looked at all of that information, turned it into an automated code of 3 numbers. That number got sent to the mortgage company who looked at it and said, no, that looks right to us, and sent their code number back, and that's what happened. So in terms of assuring accuracy, how do we ensure that the credit reporting agencies actually provide all of the information a consumer provides to the furnisher of that information, and simply does not rely on a furnisher who says, yeah, that's right, we'll accept it. The law requires, basically, a tie goes to the consumer under the Fair Credit Reporting Act. The way the law works right now, the way the CRAs operate, the tie does not go to the consumer, and that needs to be fixed.
Could I just add one footnote to that? The automated system does use codes, but each code comes with a full description, which is also available to the lender. And so in other words, the code is merely a way to convey a standard system of disputes, which actually improved the results of disputes, because you otherwise had folks keystroking in their own view of what they thought a dispute was, and that wasn't very effective back in the 90s. It's a long time ago, but it was how it worked back then. But we have decided to go ahead and build a new technology platform that is being beta tested right now, where we will simply load the paperwork the consumer submits and transmit it and make it available, and in fact compel the lender to open up the material to be able to view that information going forward, to sort of short circuit this potential problem that we have, where a lender might respond to the standard code but not do a deeper look. About 15% of the time we are able to resolve a dispute ourselves about data coming to us, not data that we have, but data coming to us from a lender, about 15% of the time. So we are being proactive where we can, but some folks are, I think, conflating the responsibility of the lender. Lenders were obligated in 1996 for the first time to process a dispute and to be accurate in the data they reported. They did that because they realized that that was the other leg of the stool. You have to have a lender doing a responsible reinvestigation, just as the Bureau must transfer the data, the fullness and completeness of the dispute to the lender. So we both participate in that process at the same time. We want to make that better. I think one of the ways we're doing that right now is this new technology platform that's coming online this year.
So following up on that, Mr. Pratt, you're saying that by the end of the year, all 3 of the big 3 will be receiving the supporting documentation that Judy Thomas and my constituent in Nixa, Missouri, tried to provide to the credit reporting agencies?
Before the end of the year.
So you're going to scan the documents, and that way the lender, who has absolutely no motivation other than to say, no, we're leaving it the way it is.
Yeah, I think lenders are really motivated because these are their customers. They don't want wrong information. They want good relationships. So there are market motivations for them. But they will see the data. That's absolutely correct.
We're not talking about a local banker you have a relationship with here. We're talking about nameless, faceless people that are dealing with numbers that are not really clearly what happened. In many, many instances is the consumer comes forward and says, you've got an error. And you all put it in a 2-digit code. I can't believe you're clogged up from the consumer repair, credit repair agencies, because all you do is convert it to a 2- or 3-digit code, send it to the lender, and the lender says no, and you say okay.
No, in fact, a dispute might require several different communications about the dispute. So what you have to do is, if it's paper, just as you and I would, you have a team of people sitting, and they will unpack the paper, read through the paper, identify the various disputes that are submitted, and that's the labor-intensive side of it, particularly on the paper side. But again, our goal is to try to bring the paperwork of the consumer forward and make it available to the lender. And these are small lenders,
that's
small
news,
credit unions.
And that's good.
Yeah,
that's good. Why can't you match all the numbers like Mr. Reingold suggested?
If we did so, we would not have a credit reporting system the way he thinks of it. So let me just give you an example. By the way, the FTC was tasked with studying this 2004, 2005. They published a report after having brought in each of the national credit bureaus and interviewed the data quality experts on data matching and the algorithms that were used. So the FTC studied this question coming out of the FACT Act in 2003. And the conclusion was a good conclusion. In other words, if I have Stuart K. Pratt and I have his social with 1 digit transposed at the end of it, but I also have his full address, and in fact I know that there are 10 other data furnishers furnishing that same address, and it's been there for 10 years on the credit report, that single transposition is more likely a problem with how the application was processed than it is with the fact that this account should belong in Stuart Pratt's credit report. If I match 100%, I don't get to put that proper account into the Stewart Pratt report.
So why are you matching it 100% with the one you send to the consumer?
We're using the same matching algorithm for the consumers today that we use for any lender in the country. There's no difference.
So you're not matching all 9 numbers for the consumer?
We are matching to deliver a report. An algorithm is always going to look at the full picture of all the data elements that are provided to us in order to deliver the report.
Well, I will tell you that we've talked about percentages and numbers. We had, what, 5 senators here today questioning? Senator Nelson, as a U.S. Senator, bought a washing machine in Wisconsin. Senator Schatz owed money to a wedding service in Hawaii. I just refied, found out that Comcast had done a credit check on me last December, and I went, why? So I looked into it. Turned out it was somebody in Houston, Texas. Now, that's 3 senators out of 5 that questioned today. I think you are not well served by saying you don't have a problem. You have a big problem.
And Madam Chairman, we have not said that we don't want to deal with the problem of inaccuracies. All I've said is that we have a team that's going to look into where we can improve the system. It is a system that has to be improved with those who furnish the data as well as how the data is matched. But we're not sitting here saying because we have a 98% accuracy rate, which is what the report says, that somehow that's the victory and that's the final word on all of this. If I were a marketing person selling a product, I might be happy with 98% satisfaction, but that's not where we are. As you said, this is a system consumers can't walk away from. We have to strive to push that number down further.
So how do we make this, how do we monetize this in terms of incentivizing you to do the right thing? I know for a fact that people's credit records are threatened in disputes. A good example I can give you is a nephew of mine who believed he had his deposit due back to him from his landlord, and the landlord said very simply, you want to fight me on the deposit, I'm going to turn you into the credit reporting agency. I'm going to give you bad credit. You're going to pay more rent the next place you go. Now, this is a kid in college. What's he supposed to do? Right? I mean, he has no leverage in that situation whatsoever. The furnishers do not have enough leverage against them in this system. And frankly, I'm not sure you have enough leverage against your clients in terms of bad things that happen when you don't fix things for Miss Thomas, who's been at this for 14 frickin' years. I mean, somebody should be handing her piles of money for how badly you guys screwed this up.
No, just fix my report.
But seriously, there is no, I mean, you won't fix it if you're not going to be monetarily punished.
I think that's exactly right. I think what we've seen, I mean, it's interesting that at this point we're finally looking to fix it again. I mean, these are problems that have gone on for 20 years. I'm glad the industry is now doing a study and fixing these problems, but they've known about it for a long time. Fundamentally, the system they build, the automated system that turns people's stories into numbers, is a cost of Ms. Thomas' dispute is simply a cost of doing business. The money that she will ultimately receive in litigation is a drop in the bucket in terms of the money that the credit reporting agencies made. Consumers are not their customers. The market isn't working for customers. Their customers are the furnishers of information, the credit card companies. Those are the people they're trying to satisfy, not consumers. The question is how do you build incentives so that, in fact, consumers are the customers? And it's the consumer's information, for God's sake. It's our information that's being bought and sold and spindled and twisted for all sorts of purposes, yet the system is not designed to serve their needs. The system is designed to meet the needs of companies who are offering credit.
Dr. Beals, we talk about making the market work. If we wanted to make this market work, shouldn't we put something in the market that the furnishers of bad data have some kind of economic incentive to make sure that that data is correct? Clearly that is missing in this free market economic model.
Well, it's missing, but it's missing because the provision of data is entirely voluntary. And as you pile obligations on the furnishers, what you risk is that furnishers say, fine, I won't tell you anything. I mean, it's the equivalent of the response to the credit repair guys of the credit union says, you know, this report's accurate, but I'm just not going to report it anymore.
So why are they giving the information now?
I'm sorry?
Why are the furnishers giving information now?
There's a shared benefit to it.
Of course. There's an economic incentive for them because if they're...
But Madam Chairman, there's new data sources. Professor Beal's testimony talked about the fact that there are some consumers who don't engage aggressively in the traditional credit marketplace. They don't like credit cards. They tend to go cash-based. Many more consumers are more debit-based, post-recession. So there are consumers who don't have a thick credit report or even a credit report that can be scored. So in this case, we need new data sets. So, for example, there are new data sources. The device you held up, that's a credit-like transaction. Every month you make a payment for the services you receive from that smartphone. Those types of service providers don't want to report into the credit reporting system today because they already see the penalties for and the severity of what has been built into the FCRA as being too severe for them to choose to participate. So
you've got to be kidding.
No, absolutely not. And
so
in fact,
you're telling me that that my account with Verizon, that they are so worried of the FCRA that they don't want to report my information.
That is correct.
Okay, that just strains credulity.
Oh no,
honestly.
No, and in fact, I think
exactly how much money has been collected against these companies through the FCRA? What is the burdens that they have had to bear?
Well, let me walk through the liabilities. I'm always surprised when, by the way, Mr. Reingold and I are up here later. We're going to have a drink. Our sons went to school together, and they texted each other this morning saying our dads are going to testify here this morning. So I'm trying to figure out which one of us is doing better. But I will say that the FCRA has the following. Private rights of action for the accuracy of information, so any consumer can enforce the law as a private consumer, even when they don't want to. There are AG, attorneys general may enforce the law. The Consumer Financial Protection Bureau may enforce the law. The Federal Trade Commission may enforce the law. There are class action penalties as well as individual, as well as an imposed, in the case of willful violations, a minimum damages. So this is not a statute that is uncoupled from what we consider to be the self-enforcement mechanism that you would traditionally see. So I do think the incentives are there. If the theory of incentives is just a sort of Damocles hanging over the heads of the bureaus, but it isn't. Bureaus don't want to get it wrong. Our members want to get it right. The consumer relations folks don't want Judy Thomas to ever get the result that she got. Now, that's little comfort to her at this point, but we're going to work on that going forward.
I'd like to follow up, and maybe Senator McCaskill will as well, as on this. I worked hard in the Dodd-Frank bill on the free credit report and to make sure that that was part of this. And Senator McCaskill raised some excellent questions about those free credit reports and what was happening and why it's so hard to get them. And she can follow up on some of it, but I wanted to make sure that the questions asked. What do you know about it, Mr. Reingold, and then Mr. Pratt?
Well, in terms of the annual credit report, I mean, there's two issues. So one, obviously the industry found a pretty good way of monetizing the notion that people could get credit reports. Experian created freecreditreport.com. They've now changed their names there. It's a good thing that people can get an annual credit report. There's actually a bill in the Senate that I have the number in my testimony, I don't have it in front of me right now, that was introduced this year so that people could get the free credit report along, a free credit score to go along with their credit report. Right. And it would be the credit score that that's actually used to pass judgment on them. And that's a very good bill, and that would be an improvement. What's happening in terms of that advertising, I think it's a great case for the Federal Trade Commission. I think it's misleading, and I think it's a case that's something that the FTC can certainly bring an enforcement action against, and I think there's no reason why the CFPB can't pass rulemaking saying, you company that are under my jurisdiction should not be misleading people with that type of advertising. I don't see there's any reason why both those agencies move forward on that issue.